Hello, everybody. Friday was an ugly session for the overall market. And like I said, if I was going to wait to switch all the models to a sell signal on the indexes until they broke to new lows in December. But the mere fact that we've retaken to the downside the 50 and 200-day moving average immediately following the Fed announcement. And I like to pretend, let's pretend that everybody lives on an island, but instead of like Maui, for instance, it's an actual island where there's not a lot of people everywhere. And so all you have access to are your charts and nothing else. And let's say you don't know that today is quadruple witching Friday, and you see a bar like that on an index like that, that would normally be extremely, extremely bearish. So overall, not good. So the models are going to switch in the NASDAQ. It's going to switch in the Dow Jones Industrial Average. As you can see here, ugly, ugly, ugly day. And it's going to switch in the S&P 500 back to operational sell signals. Just as a reminder, the Russell 2000 is already under one. And look at the Dow Jones Transportation Average today. Absolutely ugly. 73.64 takes out the 74.06 low of day from a few days ago. So the DJ20 is hitting new lows. Don't forget, this model switched to a sell signal sometime here in May. I didn't look it up after yesterday's video lesson as I had fun things to do. But overall, not good. I mean, it's been under a sell signal the whole way, and now we're breaking down to new lows. Pretty ugly. And so looking at the oscillators and all these things, terrible. A little positive divergence, but that's only in one index. TSV terrible, MACD terrible. Switching Russell 2000, uh, terrible. MACD terrible. TSV terrible. Stochastics, and a slight positive once again in RSI on both of those. And then moving to the Dow Jones Industrial Average, similar situation, minor positive, but nothing yet. Ugly and ugly on all the other oscillators. And then looking at the NASDAQ, TSV ugly, MACD ugly, Stochastics ugly, RSI not enough to get excited over. And then the NASDAQ 100, TSV ugly, MACD ugly, Stochastics ugly, RSI even weak. So overall, not looking too good here. So that's why all the models are back to operational sell signals, which means we have to be extremely careful. There were only a few sell signals today, though. HCKT on an end-of-day basis is a 50% sell with the closing below the 50-day moving average. Don't forget the original long signal is back here. So with the 200-day moving average above that level now, the 200-day moving average, if they're, let's say, just continues to sell below the 50-day moving average on low volume, the 200-day moving average acts as the fail-safe. However, a confirmation sell-off below the 50-day moving average on heavy volume, this chart's gotten ugly enough on the short term with all this distribution now that we've seen throughout the end of November and into December, it would become a full sell with the next heavy volume sell below the 50-day moving average. And HA is closing above the low day of the signal date and the 20-day moving average. Those two things combined makes it a full sell with the heavy volume break. So I think the original sell stop levels were back here. I'm already out of HA personally as I moved up my sell stop to like right below these levels and I got taken out back here. So HA is a full sell on an end of day basis. And Expedia, which was away, um, wasn't doing that great as soon as it started to trade from away down, yesterday with the market. And today it's closing below the 50-day moving average and heavy volume. So this chart now looks totally topped out to me. The reversal from the gap up on earnings, the attempted breakout and reversal on even heavier volume, and now just once again a failure to even potentially break out following a pocket pivot point signal, rolling over following the AWAY acquisition. So EXPE is a full sell on an end of day basis, and then MNST by it slicing through this low right here, following our long back here as an earnings winner. No need to use this support level anymore because the breakdown below this support level is on very strong volume in red BOP, so MNST is a full sell. Now, with that being said, I flagged a few stocks, out there, so that, that's good. But I want to show you something kind of disappointing. PAC-B, you can see race today. Unfortunately, on 12.8, man, this thing almost became a long signal. And I tell you what, so perfect, right? Max Green Bop, volume surge. If you actually go back and look at my longs on 12.8, I believe I did flag it, but maybe I didn't. Did I flag it? Let's see if I'm referring to my paper back book, Pack B. 12.8. Oh, I'm looking at the wrong date. Haha, that helps. Yeah, I sure did. So you can go to 12.8 on the website and you can see Pack B was flagged, but it was not taken as a new long because while the volume surge is beautiful and the BOP surge is beautiful, maybe next time what I learned from this trade now is maybe next time I do take this trade. It wasn't taken because if you look at the bar open to the bar low, you can see that it traded within 6 cents from each other on the downside. But from the bar high to the bar close, there's a 16-cent difference. So overall, the pattern closed pretty weak. Like it showed more weakness at the top with that volume surge than it did from an intraday reversal, like strong accumulation, is how it appeared to me. Now, that day I didn't go look at the intraday chart, and I actually were going to go do that just to make sure. But even if it did do that, it still is closing high enough that whenever, like, I even look on an arithmetic chart, you know, I could have justified it, but it would be hard to do because one of my other minimums, if I'm going to do that also, if it's not closing, if there's more work from the highs to the close and from the lows to the open, is that it needs to close above the 5-day moving average. And you can see here with the blue line, it didn't do that. So still not sure how Pack B could have been a long unless it would have closed around 973. At 973, you know, then it's above the 5-day moving average, and then maybe I go long. But still, a lesson learned from this, when I get a chart this beautiful, this is what it used to always work, by the way. You know, the heavy volume, max stream BOP stays almost green the entire way, and then a big surge again to max stream BOP, nor hopefully it stays there, but this one it didn't, and a volume surge after low volume, and you can see, you know, basically perfectly bouncing off support. I thought maybe, you know, hey, maybe it'll give me another opportunity, like right there maybe. But instead, BOP went the wrong way. Still show up my BOP scans, but, you know, still going the wrong direction. Then it went yellow, and I don't really like that breakout now. And whoops, now it's up big. So from 12.8 to now, we could have possibly have had a 25% gain in a short amount of time. So it's just another lesson to learn from this terrible tape and just more proof of how terrible December's been. My God, it's been a horrible month. I can't even sugarcoat that at all. You know, and on that end, I also screwed up and got rid of a nice stock on my end. It's still a hold on an end-of-day basis, but I moved up my final sell stop to below 322 after it held that support with the volume for 2 days, and BOP started to fall, so I used the support at 322. Unfortunately, trade down to 319 on the 14th and shook me out. Didn't do that on any other day. Would still be long. As for 2 days, you can see 322 held, and now it's up and up more. So in 3, and I was even thinking about buying it back after this day, but I was like, you know what? I wish I can see BOP's trending lower, so I'm not going to buy it back. And with the lower volume, not at least heavier than the day before, no need to buy it back there. And now, it's kind of stinging. So I'm going to be looking for an area to buy OCLR back, and also I'm actually going to buy back CTRP. I'm going to buy it right here. Try to get it at 48.71. The I think remaining 1%, because half of the 1% would already be gone. But I got shaken out of the other half. And the final sell signal will be a move below 47.74. So getting along at 48.71, we only risk $1 on the shares that I will be purchasing. So not an excellent reward risk ratio, just like our other 2 new long positions. First, we'll go to the speculative one, VEDL. VEDL is, you know, speculative, play on the, you know, mining stocks, but nice pocket pivot point signal, another surge in BOP after being, you know, green for a very long time. So beautiful chart off the lows. You can use your first sell stop below either today's low 495 or the 16th low 492. And then unless it reverses, you know, if it just pulls back on lighter volume and keeps max green BOP, then you can use 477 as your final sell stop. The position's small, 0.75%. And then the only good long signal tonight really is HSII. This is a CanSlim quality name. It is also confirmed in my price volume BOP scan. By the way, VEDL was a BOP in my green BOP for 20 days scan and was confirmed in my price volume BOP surge. HSII is CanSlim quality confirmed in price volume BOP scan. Once again, excellent reward risk ratio. We probably have over 5 to 1 just to get back to the old highs, but we'll be using today's low a day of 26.72 as our final sell stop if HSII does not move ahead immediately. All right, that's it, everyone. Have a great weekend. I'll see you on Monday.